The Bank of England cuts rates but warns about the impact of tariffs. The UK Central Bank cut its main interest rate by 25 basis points to 4.25%, despite an unexpected three-way split among policymakers as US President Donald Trump's tariffs weigh on global economic growth. Well, George Godber is fund manager at Polar Capital. George, first of all, we were expecting this cut, but should we be worried that policymakers aren't all on the same page?
Well, as you say, the cut is not a surprise. That was fully priced in market. What has been a surprise is that two members voted to hold rates. So, we've got two voting for 50 basis points cuts, the rest voting for this 25 bips. So it looks like a very, very confusing message. One of those members does have a slightly erratic track record of voting, but yes, that is surprising. But I think the main thing is at the moment, the Bank of England is on a trajectory for gentle cutting. That's likely to change later in the year, but at the moment, that's really the message that the market will take from this.
But George, that confusion doesn't really help the markets, does it?
Look, I mean, markets like certainty. We had a sort of an odd, policy response here. Now, but if I was going to take the opposite side, be in the Bank of England's camp for a moment, they would say, well, we're grappling with the unknown impacts of tariffs. We don't know how that'll play out. And there is still some signs of stubborn service inflation. Now, if we look forward and where we're going to find ourselves in the summer with the lower oil price, lower gas price, lower petrol price at the pump, big drives of inflation, we should see another downshift inflationary data. And it's over the summer that you'll see the Bank of England move to a more faster pace of rate cuts. But at this stage, they're not able to do that.
Now, you talked there about tariffs, and Governor Bailey also said that tariffs were possibly hurting growth in the UK, though we could be close to a deal with the US. So do you think the bank's being caught out by this?
I guess I'd be a bit hesitant till we know the detail. Is it going to be a broad brush? The UK and the US are friends. Is this going to be a detailed agreement? Are we actually just going to find ourselves we're back in the same place we were about 2 months ago? I don't know. So I think it's probably that these discussions have been pretty live. I'm sure that the moment that that they can agree for the Bank of England, they will. I think overall, whatever comes out, it's going to be a positive for sentiment towards the UK, for sterling and UK markets, though.
Now, the Governor also warned again about inflation, but can we now stop worrying about it going forward?
Look, I think the signs are very promising. If we look at the really key drivers of inflation in the UK, and that if the UK, it's really linked to the natural gas price, and we've had a very material drive there. Why does that matter? It's what sets our marginal electricity rate. That's what has been putting up utility bills for, the pub where you go for your lunch, where the hairdresser where you get a haircut. That is some of the stickiness we've seen. In addition, we've also seen a lower level of wage inflation start to come through with the minimum wage levels, and that will just allow a sort of easing of those service-based inflationary pressures. So yes, I think we're nearly there, that it will be yesterday's news, but not quite.
Now, we also had the Fed hold rates this week. What did you make of that decision?
Well, I think the Bank of England's got a sort of an easier sort of data set to deal with than the Fed, frankly. I mean, we've almost come desensitized to the news, but just take a step back. It's an extraordinary situation where the president is calling, the chairman of the Fed a loser on the Sunday and then saying, I'm not going to fire him on the Wednesday. The Fed has got a very difficult decision. We know from the soft data on the ground, tariffs are having a real impact on the US economy, both in terms of price pressure, but the effect on the consumer. The Fed has got a much more difficult juggling act to cope with at the moment.
That was George Godber from Polar Capital. And don't forget, you can watch more videos on Reuters.com.